Are you ready to smash the Forex markets this year? I'll show you the best strategies that beginners can use to start profiting, even with a small account. So by the end of this video, you will have 3 proven strategies that are beginner friendly and easy to implement. And yeah, don't miss the last strategy. It's used by many traders. It could be really profitable if you know what you're doing. So what are we going to cover? First, we start with strategy number 1, strategy number 2, number 3, and we end up with choosing the right strategy. So the first strategy is trend trading, and trend trading involves identifying the overall market direction and trading in the same direction. So it's quite beginner friendly because it's simple, it's effective, and relies on following the big players in the market. Trend trading is also advocated by many big traders, and you can use Forex trading, stocks trading, crypto trading, doesn't matter which market. You can apply this trading strategy in several markets. In assets, it doesn't even matter. As long as you can identify a trend, you can use this trading strategy. So I have a step-by-step process down below. Okay, so how does this work? I have a step-by-step process shown over here. First, you start with identifying the trend using moving averages, for example, the 50 EMA and the 200 EMA crossover. Then you wait for a pullback to a support or resistance zone. And next, you confirm entry with the RSI or the MACD indicator. So let's take a look. Alright, so over here we are looking at the Euro-USD pair on the daily time frame. We see the red line is the 50 exponential moving average, the black one is the 200 exponential moving average, and we see the red one is below the 200, which means that we only trade sell opportunities, right? Over here, let's zoom in a little bit. So we look for sell opportunities, we wait for the pullback, right? And we wait for it to respect the support level over here. Let's use the rectangle. This is the support zone. So price goes to the upside. I mean, this is the resistance. It used to be support over here, but now it is resistance. So it moves up. It moves up to the resistance zone. We're still looking for sell opportunities. We go down to the RSI. We wait for the RSI to cross the 50 level. So it means that we have a lot of momentum to the downside, which is about here. It crosses the 50 level at this candle and we take the sell, right? So let me use the short position tool, which is here. We place our stop loss above the latest high and we aim for a 1-to-2 risk reward ratio trade about here. This is profit, right? So that's a nice example you can use. Over here we see price keeps going down because we're in an overall downtrend. So first thing you need to do is you identify the trend, which is to the downside. We wait for a pullback. We grab our rectangle again. This used to be support, now it is a resistance. So it pullbacks to the resistance zone. We wait for our RSI to drop below the 50, which is here on this big candle, and again we take a short position, place our stop loss here, and this is a nice trade. And I have multiple examples, but I think that you understand what the trading strategy involves. You identify the trend, you wait for a pullback, and then you look at the RSI level to cross the 50 to the downside, and you take the trade, right? The sell trade in this case. Okay, breakout trading. A breakout strategy focuses on trading price movements outside of consolidation zones or key levels. And breakouts often indicate strong momentum, giving you the chance to catch big moves early. And again, over here I have a step-by-step process as well. Identify first the consolidation zone or key levels, for example support and resistance that I showed you earlier. And yeah, you can use volume or the ATR, which is the average true range, to confirm strength to the breakout. And then you place simply pending order slightly above or below the breakout point, or you can just manually use the market order execution. And again, I will show you a example as well on TradingView. Okay, so over here, this is the chart again, Euro USD on a daily time frame, and we have the Bollinger Bands. That is something you can use for breakout trading. And over here we have a support level, which is here. We have former resistance level, and we see that volume increases over here, and then it also, let me zoom in a little bit, it breaks out of the Bollinger Bands on this candle, and it also at the same time breaks out of the former resistance level. So in that case, you can easily take a buy order right over here. Okay, let's say you do a 1-to-1 risk reward ratio trade, so that's over here a nice win. And over here, let's say you place your stop loss lower about here, then it would also eventually result in a profitable trade. But some people, they place the stop loss a little bit higher, just on the blue line of the Bollinger Bands. In that case, it would be a nice 1 to 1.3 risk reward ratio trade. So yeah, you can use the Bollinger Bands, for example, but you can also only use support and resistance. It entirely depends on you, whatever you want. For example, let me see over here. We grab over here our support, right? Over here, okay. So this was support, this was resistance. Then we see a break, we take a buy. Later we see price comes down. It ranges a little bit. We see over here that it breaks the rectangle, so we can take a sell trade, and then of course it depends on your stop loss where you place it, but it eventually keeps going down. Again, here we see another possible entry to the downside. So that's basically in a nutshell the breakout strategy. You wait for a consolidation phase. Over here again, this is consolidating, and then we see a breakout to the upside, and then we take a buy trade, right? So it's consolidating, it breaks the resistance, and finally we see price moves to the upside. We also see some volume over here, most volume, and then we can take a buy. Alright, then we have the scalping strategy, and scalping involves making small, quick trades to capitalize on minor price movements. It's fast-paced, but you can start with small lot sizes to limit risk while learning. So scalping it could be for beginners, but it's mostly used by more advanced, more experienced people. But I started myself as a scalper as well. And it really depends on how disciplined are you. If you have the discipline to enter and get out with 5 pips or 3 to 5, 6, 7 pips consistently, and do not become greedy and think like, well, maybe it should keep going higher and I make even more profits. If you do that, then it's really not for beginners. You really have you need to have a strong mind, become a really disciplined trader, and you can start using scalping trades, because then you also know more quickly how the market moves, how to do really simple things as a trader. So let's say if you are a position trader or a swing trader, before you become profitable, you need to make, let's say, 50 trades, 100 trades for you to understand it, but it would take you several years to find out, right? But if you are a scalper, then you just do the basics, and it's really fast for you, and yeah, you really identify, and it's more clear for you what strategies work and what kind of strategies do not work. So that's why I think scalping could be for beginners. However, you need to be really disciplined, and I've shown a step-by-step process for the scalping trading strategy over here. Yeah, focus on high liquidity pairs like EURUSD during active market hours. So that means that you only trade during London session or New York session, and also the overlap, because there, yeah, the liquidity is the highest. Use a 1 minute or a 5 minute chart with Bollinger Bands and stochastic, the stochastic oscillator or the RSI, and you just enter trades when price bounces off Bollinger Bands and confirms with stochastic or the RSI. And my tip is that you close trades quickly, 5 to 10 pips, and yeah, use tight stop loss orders, otherwise you would blow up your account, which is not something you want. So let's go to the charts. Okay, so now I'm looking at the TradingView chart. EURUSD 5 minute time frame. By the way, if you want to use TradingView yourself, you can sign up for free using my link in the description, in the resources tab, something like that. Alright, so 5 minute time frame. Again, I mentioned only trade during hours when liquidity is highest. So you look for, let's say, between the London session and the New York session, so 9 a.m. until about 3 o'clock. And you only look for sell opportunities. Why? Because you identified first on a higher time frame, let's say the 1 hour time frame, the market direction, which was bearish. So you only look for sell opportunities. So you wait for price to reach, in this case, the top of the band over here, and then we see that price goes down. It comes back in the band. You can take a sell order if you are more aggressive, but if you are more conservative, you can wait for price to cross the, let's say, the 50 RSI level to take a sell trade, and then let's say you place your stop loss about here, and you aim for, these are 5 pips about here. These are 5 pips. So that's, yeah, really quickly. It's basically in 5 minutes. But as you can see, the risk reward ratio is not that good, but only if you also put your stop loss a little bit lower at the top of the bar, then you'll see it's not amazing. But if you only get out of the trade really quickly in an environment that has a high win rate, then you can make this really profitable. But let's say that you aim for 20 pips, which I do not recommend, because that's more like a day trading strategy. Then in this case it would result in a winner, right? But we only look for 5 pips. You can use 10 pips as well, but I recommend between the 5 and the 10 pips. So over here this would be a winner easily. And also here, let's say you enter when it comes out of, when it comes back in the band, then this was also a nice winner. And if you want a positive risk reward ratio, then about here, it would be almost 10 pips, and then you had a nice risk reward ratio trade. For example, here this would end up, let's say, 30 pips. Again, this would be day trading, more like day trading, but this would be a crazy risk reward ratio trade, right, over 3. But again, for scalping, I recommend just 5 to 10 pips. So this would be a nice trade. Let's take a look at another day. For example, here we wait for price between the specific hours, between the 9 a.m. or 8 to 9 a.m. to about 3, 4, 5 a.m. p.m. Yeah, it's the New York session. Then, for example, here, this is really scalping. You take 5 pips, right? Or even lower, but let's say 5. Let's say here we aim for 5 pips, so that is here, this is the winner. You enter at this close of the candle, it touches the top side of the Bollinger Band, it comes down, you enter, and then it is 5 pips in profit, right? And then you get out of the trade. So you know exactly if you are profitable or if it was a loss within 5 minutes. So in this case, it was a win. Again, over here, price goes to the upside, it comes down, and you can take a trade when it comes down. 5 pips, again profits. If you want to wait for the RSI to cross the 50 level, that means that you would enter the trade here, and that would result in a 5 pip win, and even lower 15 pips if you want to hold it, right? But I do not recommend it if you're scalping. So yeah, that is the trading view chart. What trading strategy is for you? So if you want to identify your trading style, simply ask yourself, do you have time to scalp, or do you prefer slower, steady trend trades? And if you want to identify, if you want to see which trading strategy suits your personality, just check out the link down below in the description for the quiz. And yeah, if you just answer the questions, then you'll find out which trading strategy suits your personality and has a bigger chance of becoming your trading strategy in which you are profitable. My tip is to just experiment with these trading strategies on a demo account first before trading live. It's really important that you just play around on a demo account because you have probably no clue what you're doing. So you need to just play around with it, trade on a demo, see which trading strategy suits your personality, and then if you have more confidence, you can use a live account. And yeah, just track your results to see which fits best. A recap in just one sentence. Trend trading, breakout trading, scalping are all great ways to start profiting in Forex as a beginner, and success just comes with practice and patience. If you like this video, give it a thumbs up, subscribe, and I see you in the next video.